Everyone, hope you are doing well. This video is something special for me. I released a synthetic trading course and a forex trading course partnered up with Andre Retief. I'll leave his details in the description. All you need to do, you need to go to tradersreview.co.za. You need to go to resources. As soon as you click on resources, you will come to this page. All you do, you click on read more. There is going to be a pop-up as well. So as soon as you scroll down, there will be a pop-up. But because I'm signed in now, there's not. So there will be a pop-up. You put in your details, you subscribe to our website, and then there you go. You got your forex course, you got your synthetic course. We cover all the from the most basic trading strategies, how to select the correct broker, risk management. If you are a little bit more advanced, I suggest you start here at the advanced and basic trading strategies. If you are a complete beginner, please start at the introduction, go through the course, work through it. It's absolutely free. All you need to do, you need to go to this website, tradersreview.co.za, go to resources, put in your details, and you have access to our free Forex and synthetic trading course. Hope you enjoy it. All right, let's get straight to the video. All right, so in today's video, I've been looking a little bit at inversion fair value gaps. I'm going to show you what I mean, and this is something you can use in conjunction with everything that we teach on this channel. And just to use as a little bit more confirmation, and I just want to show you how powerful it is and how I found it so far. I'm also still back testing it. I've been testing it for the last few weeks. I'm still back testing it. Please go back test it yourself. Leave a comment on how it went for you and what your results are. Awesome. So let's get straight into it. So a inversion fair value gap is when you have a fair value gap, when you have your candles going down, for example, and we leave a fair value gap. Let's just change the color. And you leave a fair value gap, and then all of a sudden price moves away from that fair value gap, and price does not respect that fair value gap. So this is inversion. Price left a fair value gap, broke through it, and then what I'm waiting for is when price breaks through it, it needs to come down into the fair value gap area, and then it continues going the opposite direction. So I will show you how to spot it, how to identify it, and then yes, go test it yourself. Let me know in the comments how it goes, and then yes, let's get straight to it. All right, so when we look at the price chart, as you can see here, for example, we're on the 1 hour. You can always refine your entry on the lower time frames, but for this sake, I'm just going to stay on the 1 hour quickly. So when we look at this piece of price action, you can see we are in a downtrend. This low was taken here. Made a push. This low was the one that took out this one here. Let me just mark it out. This one here. Change the color so you can see a bit better. That high took out this low. So we had a high, low, high, low. So this was the most recent high. Let's just delete this. So as the rules, we had a market structure shift. We're waiting for liquidity to be taken, and this is what I like about this inversion fair value gaps. We wait for liquidity to be taken. Let's quickly see what happens. We had a reaction from here. We pushed up. Where was the fair value gap? There's a fair value gap that the market left. And there was a fair value gap what the market left behind. As you can see, price took our liquidity, and it also respected our nice order block here. Let's just make that a different color. respected our order block here, took liquidity, had a push up. We had a first inversion fair value gap right over here, second one right over here. Price closed above this trade, entered our inversion fair value gap, and then price went all the way up from here to this high. So what you can do, you can go test it and you can see where you can put your stop loss. If you want to put it below, you get stopped out. So I would suggest whatever the size of the fair value gap is, put it a little bit beneath and adjust your risk accordingly to your account size, and then you target the next level there. Let's look for another example. So let's follow the market. Market went up. We broke this high here. Came and retraced a little bit. What do we have here? We have a nice 1 hour order block here with a fair value gap. This is a breaker area. Price never came to it. Here we had another high being broken. Let's quickly see. Came and retraced. We are inside of a fair value gap and an order block right over here. Let's quickly have a look. Is liquidity swept? On this time frame, no. Let's just quickly go down to the lower time frame. There we go. So here you can see a little bit better. Broke through, came and retest. Price reacted from which level? This level here. There's a nice order block there. This is where it reacted from. Let's just mark that out. Is liquidity taken? Yes. There's your liquidity, because there's a fractal low. This candle is higher and this candle is higher than this one. So there's your fractal low. So liquidity has been taken. Is there fair value gaps created? There's one, yes. Let's draw that out. Just change the color again. There's your fair value gap, this one here. Price broke through this fair value gap. We were waiting for the closure. This candle closed on the inversion fair value gap. Price came back. You entered your trade. As the rules, as the previous videos, it's always safe to put your stop loss below the most recent high or low, and then you can target your next level of liquidity that's going to be there. Let's look for another example. There we go. So we broke this high. Let's just zoom out a little bit. We broke this high. As you can see, we keep on breaking highs. And that high was created there. So let's see all the way down where the price react from. Price reacted from this order block zone here. Came back for the retrace. So let's look at the first one we did. We broke. We came back. There was no liquidity taken. We broke. We came back a little bit. There's no liquidity taken. So what's happening, there's liquidity being created on these levels because no liquidity has been taken on this move going upwards. Liquidity has been created. And then entered our order block and price started to come down. So let's have a look. Price reacted from here. It took this liquidity, entered at this huge fair value gap. Is there an opposite fair value gap? Yes. Did price close above it? No. So it's not a valid trade. Price came down. Did it take liquidity? This liquidity there, but here's an order block, a close order block nearby. Let's quickly see. There's a fair value gap created there, but there's no liquidity taken, so this is an invalid inversion fair value gap. Price came down, it took this liquidity, entered our order block. Is there an inversion fair value gap? Yes. Did price break through it? No, so it's an invalid trade. Price came all the way down, took this liquidity, now this low here, exact same thing, created a fair value gap. Does price break through it? No. This liquidity has been created. Let's see here. Let's just delete this so I can see. Liquidity has been created. Yes. Price took it out. We had a huge push. Was there a fair value gap that's been created, an inversion fair value gap? Yes, we do. All the rules are met. Liquidity has been taken. We closed above this inversion fair value gap, broke through it, came back for the retest, and we went all the way up. And where can you target? If you want to be more conservative, you can target the first level here. You can take profits. There's another level here. There's another level here. And then your main level will be this huge one that will be there. All right, let's look for another example. All right, so here you can see we broke this high. This is our external high. So let's start from there. Everything in between is just going to be the build up. All right, let's see what happens. So we broke this high. Created an order block right over here. Price entered our order block. Let's go to the lower time frame. All right, so we in the order block. Price reacted. It came back. It created liquidity right over here. Just before this fair value gap, created liquidity. We got a reaction, so came down, entered here. We got a reaction. Did we leave a fair value gap opposite direction after we took out the liquidity? Yes, we did. There's your fair value gap. Price broke through, closed above that. Enter there. Can put your stops below the low. And you can target your next level of liquidity. That will be this high right over here. And yes, you can go back test this a little bit. Go test it on the higher time frames. I find it's better on the higher time frames to identify it. And also it's a little bit more secure if there's a big level that we know has been taken. For example, you can see liquidity has been created here. Relative equal lows. For example, if we are on the higher time frame, let's mark out that zone. Did we leave a fair value gap, an inverted fair value gap? Yes, we did. Price broke through, came and retested right over here for the first time. And we got that big push. Price came back to the zone, retested, and you can target your next level of liquidity. That's going to be this high here with the big push down. And then, yes, go back test it. Here's another example. Here's a low created. Liquidity has been taken right over here. We are currently in this fair value gap area here, as you can see. So liquidity has been taken. Is there inversion fair value gap created right over here? Yes. Price broke through, closed above that, came all the way back into your trade, and then you target the next level of liquidity. That would be this high here. Let me know in the comments what you think. And then, yes, go enjoy your free course on tradersreview.co.za. If you are unsure of a broker, we go through our website. It is educational for you as well. We cover forex brokers, we cover synthetic broker, the RIV, and we cover prop firms. So if you are one of them, please go have a look. If you want to become an IB as well, please go have a look, do the research, all on this website. And yes, I will see you in the next video. Cheers.